What's up, guys? This is Crypto with James talking to you today about UMA. UMA is trying to change the game in terms of oracles. It's an on-chain oracle that I'm quite fond of in terms of their approach to DeFi because they're not third-party like Chainlink, like Band, and they have the ability to resolve problems with oracles in a more decentralized fashion as well. Uh, I think this could, based on the adoption that they've had alone over the past year and a half, um, I think this is one that has still can do a really strong price rally. It's probably overpriced right now, just because of the bear cycle we're in. But I think there's big gains to have on this, so I'm going to talk about this along with what's to come. We're at the end of the year now, so what's to come for 2023. Before I get into that though, if you are new to the channel, these are the first 26 coins that I owned when I made the channel. I've been in the market for 8 years, but I made the channel a couple of years ago. They're also the first 26 coins that I spoke about on the channel. Had you just put in $100, just 100 into each of these coins when I released videos about them, and you ignored those coins for 2 years, just did everything wrong as an investor, never sold them, just sat on them, you'd still be in profit for 6.3k, and that's doing absolutely everything wrong. But if you'd done the right things, if you'd bought these coins last year, in 2020 when I released the videos, and then you'd sold them last year when the markets rocketed up, you could have made 123 grand. Now, I sold all these. These are not the coins I own anymore. If you want to see my portfolio, you can go to copymycrypto.com. Um, there, I share my portfolio. I share with the members in real time whenever I buy or sell a crypto. Um, have tutorials set up on the site for anyone that's brand new to crypto. On top of that, release videos on a daily basis talking about the markets and guys, history of success. No one in 2020 spoke about Phantom. I did a Udemy course that was literally called the best cryptocurrency investment of 2020, and it was all about Phantom and how it would 100x. Obviously, it did way more than that. It did 677x. So if you'd have put in a grand, you'd have been able to buy a very nice house. 2 grand would have made you 1.3 million. Now, when I find the next Phantom, I'm not going to do a Udemy course like last time. I'm just going to go onto my site. I'm going to tell my members about it. I'm going to tell them what gains I think it can do. I'm going to tell them what percentage of my money I'm putting in, and they can copy and make the same gains. If that interests you and you want to take the work out of it for yourself, just see what I'm doing, copy along. You can do. Just go to the site. And remember, everything on the site you can check against the history of the YouTube channel. And if it interests you guys, maybe I'll see you there. So, UMA. UMA currently priced at $1.53, probably still a little bit overpriced. Hit all-time high of 33 bucks. Now, since then, obviously, circulating supply has increased fairly significantly. Now we're at about 68% of the overall supply. Um, so UMA is an optimistic oracle, and they can record any verifiable truth on a blockchain. So the optimistic oracle has been called a human-powered truth machine, which I quite like because it's flexible enough to handle ambiguity and expands the design space possible in Web3. They also have a diverse ecosystem of Web3 apps, including cross-chain bridges, insurance protocols, prediction markets, and DAO tooling products. Now, um, the founders of UMA were two former Goldman Sachs traders, whose goal was making global markets universally fair, accessible, secure, and decentralized. They drew inspiration from traditional finance derivatives to define an open source protocol that allows anyone to build trustless financial contracts. Now, oracles, their focus is this optimistic oracle. Now, they're obviously vital to blockchain infrastructure, um, and the traditional oracles are third party. And oracles fundamentally are some of the most attacked pieces of infrastructure within crypto. Oracles are constantly targeted because if you can skew an oracle's price data, then all of a sudden, basically everything is up. Well, trading is up for grabs, right? Um, so oracles are very, very vital for DeFi, particularly, when you're looking at DEXs and stuff, those price feeds are based on oracles, right? So an optimistic oracle uses a true unless disputed pattern, and token holder votes resolve the disputes. So if there's a price glitch, then that is sent to the token holders to vote on the dispute. The beauty of this is that it's immediately uh, dealt with, because prices are streamed on chain and not instantly final, based on their optimistic design. However, with a third party, that has to be created, that price feed has to be decided, and then from there it's then sent through, and that's where issues occur. Optimistic Oracle has been in development since 2014 when Vitalik Buterin published something on the matter. Um, Obviously, there's been tons of iterations of this over the course of time, but today their sort of optimistic Oracle provides flexible and unique dispute resolution, which is far swifter and more uh, and simpler, to be fair, than what you get with Chainlink. Now, UMA, if you're unfamiliar as well, UMA is backed by Coinbase Ventures, Blockchain Capital, Dragonfly, Placeholder, just to name a few. And when you look at what UMA have really done, the UMA verse is now growing at a pretty exponential rate when you look at it. Because you do have to bear in mind right now, UMA has pretty much been up and running for like since 2020. Now, if you bear in mind, obviously we started seeing the bull cycle kick into gear in the sort of late 2020, really late 2020 and onwards. Um, its price movement was pretty dramatic, but in 2 years they have managed to get um, quite a lot of integrations for UMA, whether they're synthetic assets, whether they're integrations, whether they're success tokens, range tokens, KPI options. You know, we've seen that UMA is being integrated quite heavily, and already 76.7 million in total value locked, which is not bad when you realize that the market cap overall is about 105 million. And yes, that's based across the multiple different categories that they've got, but all in, it's quite an intriguing premise. Um, and as you can see, certain success tokens have got more total value locked than others. Synthetic assets, we're not there yet. Yield dollar, we're not there yet. Options, obviously, not yet. But UMA is already really well integrated with a number of different projects, and you can see some of them here. Polymarket, Boba, which I've spoken about Boba before, Perpetual Protocol, which I really rate Perpetual Protocol, even though they've had a rough time in terms of price. Um, and look, there's what I like about this as well is minimal usage. So because they have they minimize, sorry, their Oracle usage, it means fewer calls and it means a smaller attack vector and lower fees. And the attack vector and having a smaller attack vector is important because let's be honest, oracles are the thing that has been the most targeted over the past year. UMA are also still hiring. That bodes really well. You want to see that these projects are building and building and building. The fact that they can still be hiring during a crypto winter bodes really, really well. Um, and I expect that we're going to see UMA really, really push and really, really grow. Um, I'm very intrigued to see how many jobs that they've got going at the moment. They are hiring. They are happy hiring. Um, and their optimistic oracle is better positioned than a number of different cryptos, a number of different oracles to do well because it's integrated. It's integrated with it's an on-chain oracle. That's what bodes really well. It's perfect for your sort of derivatives, which derivatives are going to end up being a massive, massive part of crypto. They are quite a part of crypto right now, but it's going to grow over the course of time hugely. And as a result, UMA will only grow because it is better positioned for derivatives trading than any other oracle out there, bar maybe API 3, which is also an on-chain one. So over the next couple of years, I'm expecting to see UMA really grow, and I want to keep an eye on exactly what we're seeing with regards to the products, not products, sorry, the projects that are utilizing UMA, because I'm expecting that to grow pretty dramatically. And UMA is utilized on Ethereum and Avalanche, and we can see based on Etherscan, there's about 20,000 holders of UMA on the Ethereum chain. On Avalanche, we'll find out if the internet works. So 20,000 people, I think, are positioned pretty nicely. This has a market cap of 105 million. I do think this is going to run back up to $20 or so, at least. And that would only put it really at a market cap of about 1.4 billion, which is pretty small potatoes when you realize internal server over. That sucks, doesn't it? Yeah. And 1.4 million is actually really small potatoes. When you think about it, it could do a lot more. And it will move in tandem with Chainlink. So if you start to see Chainlink doing a pump, UMA will probably do a bigger pump. So it's worth bearing in mind. It's like with Bitcoin moving the general crypto market, Ethereum obviously moves everything within Ethereum. DeFi, all the DeFi will move when Ethereum starts moving. And with oracles, you're watching for Chainlink. If Chainlink starts building some momentum, then the other oracles are going to start building momentum. But I think this is one, because of its integration online, because of the way in which they resolve disputes so rapidly and so securely, I can see this doing really well. And I might be really understating it at $20. But let me know what you guys think in the comments down below. Like the video, and if you're a returning viewer, hit the subscribe button. The videos will make you money. You don't want to miss them. And guys, if you want to see the coins I own right now, then you can go to copymycrypto.com. And on that site, I share my portfolio. I give the members real-time updates anytime I buy or sell a coin. We have tutorials on the site that are step-by-step for anyone that's new to crypto, which a lot of our members are. Release videos on a daily basis as well, talking about the markets, talking about what my expectations are for the day or for the week, if that interests you. And look, there's a history of success on this channel. There's a history of success on the site. We've had big gainers. We've had Phantom. No one in 2020 spoke about Phantom. I said it would 100x or more. It did 677x. I'll find another Phantom, and when I do, obviously I'm going to go onto the site and tell the members. I'm not going to do a Udemy course like last time. I'm just going to get onto the site and go, I think this coin can do this. Run. I'm putting in this percentage of my money, and they can copy along. And if that interests you, then go check out the site, guys. The link's in the description, and you can see it on the screen above me. And yeah, go check it out. Remember, you can verify everything on the YouTube channel as well. Maybe I'll see you guys there. And the last thing, predictions for 2023. So obviously we've had an interesting year with all the centralized exchanges getting wrecked. So here's the 10 predictions from Cointelegraph. Crypto venture capital funding will continue to decline through the first half of 2023, but that's not necessarily a bad thing. Rather, it normalizes to a point. Rather, it is normalizing to a point that is rational. Investors don't want to catch a falling knife, so they're waiting for things to bottom out while also weighing broader macroeconomic concerns. They also say that new settlement layer ones, layer twos, interoperability, lending and trading protocols will continue to get funded to fill the vacuum resulting from the changes resulting from hacks, treasury shortfalls, regulatory changes, and exchange collapses. There's also the prediction that Web3, the initial Web3 anarchist ethos that rejected the need for big brands will go away. and big brands will be welcomed in. Of course they will. Of course they will. We've already seen brands like Nike, Starbucks, Meta looking to experiment with Web3. That will continue, of course it will. So keeping an eye on where those big boys like to play is going to be important. People realize that the way many have been thinking about about community in Web3 is bullshit. Community was often simply a lovely word used to describe a bunch of speculators in a Discord, um, while who's sharing a common dream of Rapid Ralph. While we'll continue to see exceptions to the rules, such as strong, engaged, decentralized finance communities, as well as online to offline decentralized, DAOs. Um, what we'll realize is in 2023 is that the whole Web3 ideal of project community fit was frequently just project speculator fit. So we can't afford to ignore the fundamentals of actual product slash market fit, obviously. As Web3 app development costs go down and user acquisition costs go up, there'll be an emphasis on quality and discovery. Web3 will have its app store and ad mob moments, which will help developers and users to find each other with more efficiency. Um, yeah, and I'd expect that. Yeah, breakout Web3 apps in 2023 will look more like the top downloaded and top grossing apps in the early days of mobile. Simple user experiences and graphics with intuitive but innovative engagement and monetization. Um, Stability and sustainability in games um, will be a trend, obviously, after we've seen the bumps with Axie Infinity. Web3 will continue to offer a solid niche with apps that are functionally clones of existing businesses. Yep, agree with that. To deal with compliance costs and overhead, blockchain apps will increasingly rely on existing large capitalization tokens to power token-related mechanisms. Yeah, yeah, fair. Stablecoins will find more use cases outside of crypto capital markets, which will drive more mainstream adoption, primarily among businesses. Yes, I've said that so bloody much. What we're going to see is stablecoins being utilized as a payment system for a lot of businesses. Because why would they take a fluctuating price when they can take a stable coin? And then all of a sudden, you've got the businesses starting to put their foot in the water of crypto. Culture wars around crypto will heat up towards the end of 2023, leading to the United States election cycle. Booms and busts will continue with accidents like Wormhole, over aggressive risk exposure like Terra, and outright fraud like SafeMoon and FTX. I've thrown FTX in there because they chose not to. More politicians will take strong stances on crypto. Uh, However, the US government will continue to be indecisive on regulation to the detriment of the domestic industry. Possible. I think sooner or later they're going to have to figure out how they want to regulate it because they're just not making a decision right now. And I can't see how that can go on for another year. But it is government, and I have very little faith in governments generally, so it might. As builders develop through the bear market, there will be a point in 2023 when new growth areas start emerging beyond existing prevailing narratives like NFT, profile pictures, play to earn projects, etc. The new narratives will propel the next cycle, and hopefully these frameworks will drive real consumer adoption. And yeah, I agree with that. You look for the new narrative because that's usually the thing that starts. It's usually the catalyst. Um, what do you guys think? What are your predictions for 2023? Let me know in the comments down below. And that's it from me. Take it easy. Bye bye.